Okay, welcome back to another. What the hell kind of TA is that, Mr. Holding Bags? Well, I don't know. It looks pretty good to me actually, but I'm biased to my own work. I got a question from Johnny earlier in Charts for Charity. If you want to check out Charts for Charity, it's free. The link is in my bio on my website. But come on and join us anyway. But Johnny was asking me if I would do a weekly update, and I don't really plan on doing this that often. But because he asked, and because I like Johnny, he's a good guy. I decided to say, "What the hell? I'll do this on a Sunday night because I don't really want to watch the Chargers and the Raiders." So here we are. Here's the S&P 500 futures. Futures are open already. We're kind of flattish. But I did this study a couple weeks ago of RSI readings under 50 RSI. All but three times over the last year has been a buy. The three times that were invalid are the red marks. The blue and the green are long trades or long opportunities. Once we got into September here, is the first time we really fell off the COVID drop channel that we've been in. And then we found the bottom of the channel in October, found it again in December twice, and now in January of 2022, we are perilously close to falling off. If I looked at the weekly chart, we would be holding the 9 EMA. But what I really wanted to look at with you guys was the volume profile. Same day, Jeremy over at Charts for Charity and I were looking at this weekend, and everything is sitting on the edge of a cliff as far as the volume profile goes. So there's nothing saying that we can't revisit this 45-50 range on the S&P. I would love to see it check off the channel and go back up, but just doesn't look like it's favorable. If that 50 breaks and that trend breaks, I'd say it's a pretty good probability that we're going to 45-50. So that's how I'm looking at the S&P. Tech, even worse. We look at how the Nasdaq is shaping up, and it's already below the biggest shelf, and it's at another shelf, and it can absolutely come into this 15,100 or even 15,000. That would kind of line up with the trend line there. One thing I did point out a couple weeks ago too was this sort of bastardized head and shoulders looking formation that we had going on here. Haven't really given it too much thought over the past week or two, but now when I look at this section and this section, while they're not exactly like this section and this section, price structure is kind of similar. This didn't run up quite as high as this did, but this almost matches. They're at a smaller scale. So if the pattern holds out, we may be at a bounce spot, but really, I'm not really not counting on it just yet. RSI still keeps going lower. We're below all the EMAs. The nine's crossing the 50. It just looks awfully bearish for right now. Going to the Dow. The Dow's been the strongest. I mean, hell, look at that Santa Claus rally that it's been in until late last week. But it could absolutely pull into this sort of 3,500 area. That would make a lot of sense. I don't necessarily think the Dow's going to come down as far as the small caps or the Nasdaq or probably even the S&P. I think the Dow's actually a lot stronger, and we can see that because it's holding the 21 right now, as opposed to the S&P's holding the 50 and the Nasdaq. And the Russell here are holding exactly nothing. Um, but as far as, let's turn that off, that's annoying. As far as the small caps go, I mean, we've been in this chop for a year, and if you've traded every top and bottom of this channel, congratulations, you're a much better trader than I am. But it wouldn't surprise me if we got to bounce off this trend around 2136. It wouldn't surprise me if it came in lower to the bottom of the channel, or sorry, of the range. And the more times it tests the bottom of this range, the less likely I believe it's going to go up. I think you test something too many times and eventually it breaks. So let's look back at the volume profile. And if we scale out some, I mean, after that run that it had, it's just, I mean, it's a long way to the bottom. That doesn't mean that it's going to go all the way down to 1650 or so, but there's not a lot there holding it. The moving averages aren't, and the volume doesn't support it. Last thing I wanted to check out real quick was the SMH. Somebody sent this to me. I think it was last weekend, and I kind of mocked them on Stock Twits, especially when we, popped through that range zone that I thought semis were really going to go, but they didn't. I mean, I think we're down like 7%. Yep, 7%. So congrats, throw it in my face. I deserve that for being an ass. But no, that was a good call. I thought I was right because we were breaking out, but false breakout leads to a major breakdown, and semis closed below the 50 EMA. The volume profile also sucks. Could easily be, that's 2.5% close to it to the trend line. The midline of the long-term channel is another 7%, and that almost aligns with where the volume shelf is down there at 2274. RSI, again, in the toilet. So I wish I could have be moo-mooing it up and rah-rah bears, but, or sorry, rah-rah bulls. The Bears have the ball. But will they fumble it? We've seen them fumble in the past. They could do it here. But it looks like home court advantage belongs to the Bears right now. Wish I had better news. It is what it is. But we'll see tomorrow how things go and the rest of the week. So that's what I got for tonight for you. Thanks for listening. Daddy loves you. Take care.